Next question is one of two today from Vegan. What does the team think of comparing the market caps of two businesses with very different offerings, i.e. JP Morgan versus Stripe?
I'd say it's pretty damn foolish, really. I'd sort of say the purpose of those two companies is fundamentally different in terms of where it's there. The sort of lowest common denominator of success is usually a dollar sign or a pound sign, right? So in terms of market cap, in terms of what these things are doing, then you see it as a sign of success, but it's apples and oranges from my perspective in terms of what you're doing. I think you have to delve a lot deeper. You just can't say it's like saying is somebody more successful for earning £100,000 or £20,000 in terms of what they're doing. Well, it's very much down to kind of what their role is and what their purpose in life, what they want to achieve. So I'm not really sure you can do apples and oranges. But again, what do you think?
Well, market cap's driven by a couple of things. It's convincing investors of your future story of revenues and growth. And so if you can tell an amazing story that Stripe is going to be a multi-billion, tens of billions worth company, then people will value the share price higher to take that into account. If they don't believe you, then they won't. So there's a future-looking piece to that, together with a competition, with a supply and demand. How much do people really want to get into to owning Stripe versus JP Morgan? So you are, if you base these things on pure revenues and numbers of customers and everything else, then you're never going to come up with the sums that new startups are worth and the unicorns and where they're at. But ultimately, it tells you that investors buy into the fact that these startups do have a lot of promise and could become massive organizations in their own right, while at the same time many of the incumbents are likely to struggle, or some of them will fall by the wayside. So I think we're seeing investors, I guess, vote with their cash as to where they think the future will go.
It's an interesting one, isn't it? Because is the past becoming not the greatest indicator of future performance? But that would have been the a majority of you would say JP Morgan or anybody in that sphere or that size. The previous success would have denoted the increased chance of success. Yeah. But actually, with everything that's going on, sometimes now we're seeing it is easier to be a Stripe or a Klarna or somebody in that ilk to have that beachhead scale to a significant degree. I guess the challenge with not wanting to focus it too much on a JP versus Stripe thing, but I think Stripe is so synonymous with a smaller niche of things that inherently can it scale beyond albeit a very, very big beachhead that it's kind of stuck to in terms of all the payment stuff that it's doing. But I'd say JP has spread the risk so much broader across so many more products that actually they're in that I think they're playing a very different game from one another. So, but interesting question.